the management of NCC. It's important to analyze what the stock has done. The one-year returns in this one has been 39%. My colleague Pankaj Podar joins in with a quick review of the company's trajectory. Pankaj?
Well, Tanveer, thanks for that. If you just look at the company NCC Limited, it's been one of the good companies in the last 15 days or has given decent returns since the results have been announced, almost close to 21% from the lows of May, and then since results it's almost up about 10 to 12 odd percent. Now let's look at some of the key triggers that has led to this move. Firstly, numbers were 10% higher than estimates. I'm talking about the EBITDA and the PAT number. This is despite the sort of revenue miss that the company saw, but that could be because of GST as well. Secondly, the company, the promoter plans to infuse 110 crores in the business. That has also led to further moves. There were some concerns about write-offs in the company, but I think now that are behind, or the management has clarified that they are limited in nature. And last, of course, is the earnings number, which is the 45% growth that the management has been talking about. The consensus estimates are close to about 38%, so that was a 7% beat over there. And to match that, there has been an EPS upgrade which has been given of about 6 to about 8 odd percent by the street across the board. It's not a very well held counter, but now with such results, order inflow, management commentary coming in, you're slowly and steadily getting the overall delivery volumes on the counter also pick up.
Yes, indeed. YD Murthy, who's Executive Vice President Finance at NCC, joins in with his perspective on the business. Mr. Murthy, it's great to have you on the show. Thanks very much for taking out the time. What's your outlook for FY19? Do you think growth will be in excess of 40% as the order book looks strong?
Yeah, absolutely. In FY18, we got fresh orders of about 24,000 crores. And out of that, at least 50% of the orders are what we call fast-track orders to be completed in 15 months, 18 months, 24 months. And so they are likely to add nicely to the top line in the current financial year. And we are confident we will be able to achieve the guidance that we have given. And the company is going into 10,000 crore plus top line category. We are targeting 11,000 crore top line in FY19.
As sales go up, do you expect working capital needs and cycle to lengthen as well? I mean, do you see that also contributing to your overall financials?
Yeah, absolutely. When the sales is going up, working capital requirements will be there. Keeping all these factors in mind, in February 2018, just 2 months back, we have gone for a QIP of about 550 crores. The offering was well received, and we got some marquee investors participating in the QIP. These monies are meant primarily for taking care of the working capital requirements for the enhanced top line growth that we are planning.
What will lead the margins as execution picks up? Do you expect margins to be maintained at 10% plus levels?
Yeah, EBITDA at 10% plus we are targeting. One is because of GST, there is an improvement in the EBITDA margin by about 0.75, 0.8%, mainly because we are not taking the tax component into our turnover, and that is common to all construction companies. And also the orders that I am talking about, they have come with better margins, and they are going to be reflected in FY19 to a large extent. So we are targeting about 10.5% EBITDA in FY19.
IDFC Security says that NCC expects to gain substantial relief through its appeals, counterclaims and recover most of its dues, restricted its liability. Can you explain the same?
You see, claims is part and parcel of the construction business. We do have claims with the National Highway Authority and various other government agencies. It is a process, it will take its own time. And also sometimes even if the claim is settled by the government agency, sometimes we have to go into arbitration. So this is a process that takes place, and also because of the central government directive, that Niti Aayog directive, wherever arbitration awards are given and money has not been received, if the government agency is going to the court, they have to pay 75% of the arbitration award amount to the contractor with bank guarantee of security. That is also helping us to monetize some of our claims. So this is a process that is going on, and we are confident there will be addition to the bottom line year on year going forward. The quantum I cannot tell at this point in time. It could be 40 to 50 crores every year.
Okay. There was a lot of risk of write-offs in the near term due to international projects. Can you give clarity on that?
Yeah, we were actually focusing on improving the balance sheet. Wherever losses are there, we started writing off. Now we are at the end of the tunnel, and there will not be any further further write-off of significant amounts as we go forward. And we are focusing on our core competency, which is project execution in India. That is giving us immense opportunities, and definitely we are fully geared to capture those opportunities.
And finally, promoters have decided to infuse cash via warrants. Give us more details on the same.
Which one?
We believe that promoters have decided to infuse cash via warrants.
Yeah. You see, what happened is at the time of QIP, the promoters got diluted by about 1.5%, and now they are trying to redeem their position, bringing their holding to around 19.8 to 20% in the project company. And that process recently board has approved after shareholders approval. About 100 to 110 crores of promoter money will also come to us, which will help us for our top line growth and also reduction of debt in the balance sheet.
These warrants upon conversion, which I would reckon is about 18 months, what would that lead to in terms of promoter holding pre and post?
Yeah, right now they are at 18.1%. After conversion, after the warrants are fully converted, they go back to 19.8 to 19.9%.
Very much for joining us and giving us those details. We wish you the very best for the future. About 1% higher, 118 coming in on NCC. It's a good day for the engineering business per se, because followed by what L&T has had to say about the order inflow traction, what they've delivered in terms of order book growth. It just reflects that, some of these construction, engineering, stroke infrastructure and ancillary businesses are back in fashion and are finding their groove once again.